Hello and welcome to the February 12th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are featuring Tiffany & Company. This is ticker symbol TIF. Tiffany's is a $5.2 billion retailer that engages in the design, manufacture, and sale of fine jewelry. If you take a look at Tiffany's, it's been on a tear since early March, kind of like the overall market, with a nice uptrend in place. But just recently, you can see on this last move down, we not only violated this uptrend line, but we also moved below the 20-day exponential moving average and the 50-day simple moving average on increasing volume, some very heavy volume. On the move back up here over the last few days, you can see that the volume was much less. Now, part of the problem I have with this chart at this point is number one, we have put in a potential bearish downsloping head and shoulders pattern. Downsloping in the sense that the neckline, the right side of the neckline, is a little lower than the left side, and also at this point the right shoulder is downsloping from the left shoulder. This to me indicates a little bit more selling pressure, and if this breaks to the downside, obviously it would carry some very bearish consequences, assuming that the volume confirmed that move to the downside. Now, over the course of the last several months, you can see that we were uptrending. We had some pretty nice volume trends in place, but anytime you get a break on big volume of trend lines, moving averages, key support levels, and so forth, with the MACD moving down below the center line and looking very weak on the most recent low, you can see the lower lows in price also led to lower lows on the MACD, and to me that indicates that the selling pressure is still pretty strong on the stock, even though we have seen a little bit of a rebound in the last few days. The other thing that appears to be problematic is the RSI, not just dipping below the 50 line, but actually moving down for almost a month now below the 50 line and getting close to the 30 area before just rebounding here recently, moving back up to 48. As you can see throughout this uptrend, Tiffany's basically had its RSI above 50 almost the entire time. And with one exception in June and July, when the volume was just kind of moderate, we've for the most part held above 50, with only a couple of exceptions dipping below it. Normally, when you do see an RSI go below 50, all the way down close to 30, you see price breaks, moving average breaks, and so forth. Normally, that first rebound is held back at the 20-day exponential moving average, assuming that the MACD is weak, which it is here. And also RSI 50 generally is problematic as well for the bulls. So it looks like in the short term, Tiffany's could run into problems here. I would say at about from the current price 41.54 up to about the 42.50 to 42.75 area. That would be an area of potential accumulation for a short position, with an initial target to the downside about 39 to 40. Keep in mind, if this head and shoulders breaks to the downside with confirming volume, this measurement would go all the way down to about 31 or 32, which would actually fall right in line with this breakout in late August that was never retested. So keep all that in mind. But from a stop standpoint, a close above about 42.75 to 43 with increasing volume would get my attention, and probably I'd be willing to take a loss at that point and move back to the sidelines. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.